Hello, everybody. Good morning, good afternoon, good evening, depending on when, what time you're watching this recording. Yeah. All right. So I promised to make a video on EU for you guys. That's an EU trade I took yesterday. So I actually sent out a poll. I sent out a poll yesterday for you guys to vote. And as you can see, we had like 108 votes. 94% were in favor of me explaining, my EU trade. That is me making a video to then, sending out for you guys to be able to watch so you can like, see, the reasons as to why I bought EU yesterday and why I actually bought from that area. Okay, so 3% were actually in favor of no. Let me say, do not need me to make a video on it. Maybe because they understand, from the markups, they could like really read and see why I bought and why my take profit was at this area. Why, about 3% were also indifferent. That means they are okay. Either I make a video or I do not make a video, they're okay with it. So whichever one, are fine with it. Okay. And it's not a crime to be indifferent. Okay. You can just be neutral. Whatever happens. If you make a video, fine. If it doesn't, I'm still okay with it. So all the options are okay. But we can see about 94% of uh people are actually want me to make this video. Okay, so I actually sent out the poll in the free channel here, and then I sent it to the trading group also. That is the main trading group, Sniper Traders Family up there. Okay, so the votes were coming in from two places, and I've already stopped the poll, so there's no way, more people can vote on this already. So, yes, so since we have 94% of people that want me to make a video on it, that is why I'm, going to make a video on it now, explain to you why I, bought Euro USD yesterday. I think the entry was a few minutes after this I got activated around 9:45. That is an hour 45 minutes after London session, right after London open. London session started, and then uh, I waited an hour 45 minutes, and then the play happened. And as you can see, we are up about, price, currently about 1 to 7.8, about 140 pips, right? So like I've already taken profit on this. I'm not in anymore. I was targeting the daily liquidity to the upside. And now quickly, I can remember I posted in the Signal channel, which I then forwarded to the free channel. Yeah, what I was anticipating for the DXY and what I wanted Euro USD to do, this week. So as you can see, here is my DXY analysis. Like I said, I definitely don't know how this week is going to close. I'm talking about the weekly candle close now. I don't know if it's going to close bullish. I don't know if it's going to close bearish. Okay, so either bearish or bullish. I don't know for sure, but a move lower to capturing the immediate liquidity below is what I can be anticipating. All right, so this is the DXY chart. Yeah. So like I said, I don't know, you can see the Sunday opening price. That is the weekly opening price, right? That is when that the Sunday opening price is also the weekly opening price, right? That is the price that the market opened the DXY, for this week, right? So, like I said, I don't know how the week is going to end. But what I can anticipate on Monday, which is yesterday, is I see the liquidity, I see the imbalance. So even if price is going to go up, I feel, and I know, let me say, I know from experience that it should attack the liquidity sitting at that low. You can see we had equal lows, right? We had this, and then we had liquidity just resting above an imbalance. So when I saw this, I sent it out to you guys. I was anticipating, or what I'll be anticipating is a move down to capture what? To capturing the liquidity resting below. Okay, so I already had a bias that the DXY should go down. I'm not saying it's gonna go down like till the week is over or like all through to till Friday. All I was anticipating is a move lower to capturing what the liquidity, and then the opposite is going to be for what Euro USD, right? Because I do my analysis on the DXY and then just do the opposite on what Euro USD, and then I also sent out a Euro USD analysis, and I said, as explained for DXY, same goes for the euro dollar, right? Not sure how this week will close, but I would love to see price take out the liquidity above. Because if the liquidity is resting below on the DXY, on euro, the liquidity is going to be resting at the opposite side, that is above. Right? And I said, keep an eye for possible buy opportunities. So this is the Euro USD. I can see we have this liquidity here. Okay, we have a range, and then we have this one. So this is the immediate liquidity that is closer to price than this one, right? So I was like, okay, maybe a bullish price action to capturing this what liquidity. That's what I wanted. Okay, a move higher to capture the equal highs, resting below what the imbalance. So price capture the liquidity, fill the imbalance, right? That was what I was anticipating. Yes. And then so after I sent out this analysis, you know, mine is to just, tell you or show you guys what I am anticipating, what I want to see. Okay. I'm not going to be calling out the trade idea like the entry, the exit, and then the take profit. No. Okay. I've given you what my directional bias is, what I'm anticipating. It is for you to go into lower time frames to look for those setups yourself and then take the trade, right? Of course, obviously, that's why you're learning, right? So you can be able to do all of these things yourself. And then going into the lower time frame, I was on the 15 minutes. I saw the setup which I want to discuss. I'm just gonna click on this so it can open. And yeah, I think that is it. So yeah. All right. So this is 7:36, right? 7:36. That is, few minutes left, about 24 minutes left before London session is open. I actually saw this, amazing setup, right? I saw from structure that remember again on the daily, I am anticipating what bullishness. So the analysis has to start from a higher time frame, and then you have to work yourself down to lower time frame. All right, so I started from the daily. I was having what a bullish bias for Monday. Okay, now I'm not saying Tuesday, Wednesday, Thursday, Friday. From Monday, I was anticipating a bullish bias. And then I scaled down to lower time frame because I'm being guided by what my higher time frame analysis and directional bias that price should go up. And then on lower time frame, as a 15 minutes, I actually saw the setup, right? From structure that we're looking bullish, right? Which I'm going to show you. And then I saw the internal liquidity resting up there. I could see the imbalance, and then I have my range, and then it's close to, Sunday opening price. I actually wanted to have my limit exactly at the opening price because I kind of knew now, not obviously not with 100% certainty. I was just kind of anticipating that price might come back to the Sunday opening price from there. I mean, we have the imbalance that is so close to the opening price, so it could test the opening price again and then go up. So I actually wanted to place the limit at the opening price exactly, but it wasn't at the 20 level or any of the institutional, you know, bank numbers I enter with. So I was looking for the closest one, and we had one down at this area here. We had 97,200, and then there was 250. So 50 is a 50 level for me. Okay, so let me just go. I mean, all of them, whichever one I choose, the stop loss is not up to 30 pips yet, so still okay. Maximum pip for me, stop loss pip is 30. So anything below 30, I am cool with, right? So this was the markup, as you can see. October 17th, 7:36. Okay, so this is not the chart replay tool where I caught the data and then just take a screenshot, right? I actually marked this up before it played out. This is 7:36 in the morning before London session opened. All right, so this is before and then this is after, right? You can see price came back, actually tested what the Sunday price opening, and then price reject. Although my entry was a little bit above, as you can see, at what the 50 level, yes, and then I had a little bit of drawdown, and then boom, and then price started to go up. Okay, and I think as at this area when price took out this liquidity well, I wasn't on my phone again, so I didn't even know what was going on. I just had to come back later and see that price was already like, yeah, you understand? I mean, seeing our price rejected and seeing how it's coming back down again, you know, I wasn't like on my phone to see all of this happening, but would I have waited to, or would I have like just closed the trade because it's retracing? Obviously, I'm not anticipating price to just give me straight buys consecutively. There should be some retracement and then price goes up and then some retracement and then price goes up, right? Yeah. All right. So this was the trade. And let me just remove, let me do this. Oh, I think TradingView just updated their websites. Yeah. The bar replay tool is now down here. Can you see it? So I think they just updated the website because the last time I did this, the bar replay tool is always up. So that's good. All right. So yeah, okay. That's a good improvement. All right, so this was the markup, something like this. And, like I said, I had a higher time frame analysis. I had a higher time frame directional bias for Monday. And then going into the 15 minutes time frame, this was what, I saw, right? Based on structure, I had this low, I had this high, and then I had this lower low, right? And then I could see we had the big, you know, bullish price action that broke the structure, took out this high and then created some kind of liquidity in this area also, right? Or, people trying to sell here, but stop above this high. So definitely there's money resting in all of this area up here, right? But then the first thing I'm going to be on the lookout for is structure. And was there a structure break? Definitely there was a structure break here. So I could see this as what my break of structure. So now after the break of structure, do I have my range, right? I have this as the down range, and then I have this as the top range. Now all of this price action, yeah, did any of them actually close below this low? That was one thing I checked. No, right? If we consider like we go by line chart, after we had this, low, we had this high. None of these actually closed below this. Okay, so that means that we're respecting that structure. So I saw it and I was like, okay, since the 15 minutes is bullish, I think I can look for buy opportunities to the upside. Now I have my range, right? I have my range. I have the structure in place. I have my range. Do I have liquidity? Because when I'm buying, I want to be making sure that I am targeting, areas of liquidity towards my take profit areas, or maybe I'm targeting an imbalance, right? Exactly. So most of the entries we use, like the institutional candle in form of a mitigation candle, the institutional candle in form of a smart money cube, institutional candle in form of an imbalance, right? So we could use imbalance as entries and exit in the market, which was what I used here, right? As you can see, so let me remove this. The structure was bullish. I could see this liquidity here, and then there was another one in this area, and then I had that daily liquidity I was anticipating. Okay, so remember before I came down to the 15 minutes, I started from the daily and I wanted price to take out those equal highs on the daily and fill the imbalance. Okay, so it's going to make sense for me to catch an entry down here. And if my bias is going to be right for that day, then I'm going to make money, right? Because again, I don't control the market. I can have a very good analysis and might still not play out, right? That is why risk management is very, very, very important. Right. So, I saw this imbalance, saw this big institutional candle that created imbalance, right? I have this week here. There's this candle that doesn't have a week, and then this other candle that completes the what imbalance. Right? And then I saw this imbalance here. And then all of this what liquidity, because all of this was still liquidity to me. Like I saw all of this as liquidity. Normally, if I'm going to trade imbalance, my stop loss is supposed to go below this first candle that created the imbalance. But seeing all of this, what liquidity in form of a dynamic liquidity, this is more like a trend line liquidity. Smart money might want to come and take it out. So checking for the lowest low, how many pips? 18 pips. I think I can adjust my stop loss to 18 pips instead of having, stop loss of about 4 or 5 pips. Let me just have it in since my maximum stop loss pip is 30. So I can do with anything from 29, even 30 downward, right? Anything above 30, I'm going to like wait for extra confirmations on lower time frame, right? But since this is 18 pips, it's still okay for me. So I was targeting, anticipating that price will fill this imbalance and then reject from there, because number one, we are bullish, right? So price should give us the higher low, which it had already given us here, but it is still a potential higher low because it has not created a new higher high yet. So all of this is just price going back and forth, right? And as you can see, we had um okay, I think we have to change the replay speed to 10x. Wow, this is three. Let's see this. They just updated it on this. All right, so I got activated. As you can see, it was a very good sniper entry. Price came back to test what the Sunday that's the weekly opening price, and then I was also, you know, in on this trade below what the London opening price. Right. Again, if we are anticipating a bullish day, the best places to be buying is below the daily opening price. If you're trading the London session, below the London opening price, right? And if it's New York, also it's going to be below that because you want to catch a very good, discount entry in order to take price to the upside, right? The daily opening price for this, because yesterday was Monday, but the market is going to open 10 p.m. my time. So the daily opening price is still going to be the same thing as the weekly opening price on Monday. So I couldn't catch an entry below the weekly opening price, but it was very, very close to the daily opening. Right, so that is still good. Right, it's still a very good entry, but it was definitely, definitely below what the London opening price. So when London opened, we had a rally to the upside, and then price came back down. So I was anticipating price to fill this imbalance, yeah, and then reject. Okay, I saw it I saw it when it activated. I saw how the candles were printing. Price was down, started rejecting, and then was rejecting so hard that they refused to close below this structure here. I was like, okay, this is like a good sign that maybe my predictions are gonna be right. And maybe they are going for the daily highs, right? And then price rejected, gave us, multiple candles going in my direction. It was a very good entry, sniper entry. The 50 level played out well. The imbalance was filled. And as you can see, smart money refused to come for the liquidity. But I mean, it is better to be safe than, start feeling regret that, oh, I should have, just left this. Okay. I should have just put the stop loss way down. Since I have seen the liquidity I have seen this liquidity already. Okay. And your stop loss is, if where you want to put the stop loss is below 30 pips, that's for me now. I mean, I should be able to accommodate price taking out all of this liquidity and still be in on the trade. That's why my stop loss is way down here. Okay. I know a reduced stop loss is going to result to a larger reward, right, to risk, right? Because if the stop loss was the total trade This trade is running about 1 to 7 presently, but let's assume the stop loss was here. This should have been like a 1 to 29 risk to reward. But as you can see, this would have been really painful to be stopped out. And then because me personally, once I get stopped out on a trade, I don't like to get back in immediately, right? I just like to accept it and I just wait for a fresh setup again. Right. I mean, if I had done it in this case, price stopped me out, closed within the structure here, and then I just buy immediately again. I mean, uh, in this case, it would have been good for me, right? So I just, since I've seen the liquidity, let me just put my stop loss way down to accommodate price, maybe taking out this and then going back up. But that wasn't the case, right? My money just filled the imbalance and then, went up and it started rejecting. Okay, and then price started rejecting, and this is where we are today. Right, so price has filled the imbalance. This daily imbalance also captured the daily liquidity I was anticipating, as you can see. This was it, and then boom, all the way to the upside, and then that was it. This 10x's, and then where we are today. Yeah, so this is the trade, right? So Smama did not come for this liquidity, and then just decided to take price up, right? So it was a very good trade setup. My analysis played out perfectly, right? Again, the structure was in place, the liquidity was in place, the range was in place, the uh, institutional entry candle was also in place. And then was I buying at discount? Definitely. This was a very good discount considering this from this to this high. My entry was at below 78.6. So if you are bullish and you're buying at 78.6 below, I mean, that's a very, very good discount entry for you. You're buying it at a better price than somebody that bought at 50, than somebody that bought at 618, than somebody that bought at 38.2. You catching an entry at 78.6 below is way better. Even somebody that had an 86 entry is way better than you, right? But then where the difference comes in is the amount that was made, right? Because talking about who had the best entry, you might actually win that, right? Yes, you definitely won. You had a better entry than this other person. But in terms of the reward now, um, to the reward, that's where the difference comes in. And then the account sizes and all. So even though you had a very, very good entry, but probably you were risking $10, right? So you just made about $70 on that trade. While somebody that entered at 50, I don't know where the stop is going to be, but then if the person was risking probably like 500 on that trade, I mean, it made so much more than you, right? So yeah, but then you had a good entry though, but it made so much more than you because of the account sizes. I know. So this was the trade, very simple trade. Same thing I do over and over again. I look for the setups and then yeah. So I just want to show you also the execution. So this was it, right? I had the buy limit waiting already. So yeah, I did the analysis and then okay, let me just get in. Right. Let me just get in. And then my TP was at that daily the daily liquidity just below the imbalance. So you can see it on this chart. You can see 738. Immediately I just did the analysis. I just uh straight in went uh had the limit, right? And then boom, EU hit target one about 54 pips. That was the first reward to risk. And then this was it when I got activated. You see sniper entry, feel the imbalance, and then boom, price was just going up. So I was anticipating price is going to take out the liquidity to the upside, right? And then boom, finally, uh, we had this was so close to taking out the high, stop at break even, and then it finally did. Yeah, so took it out, and that is all. That's a trade for me. I'm done. All right, although it still went higher, as you can see, price is still going up. But I am it's done. So now I just do a fresh analysis and then see what happens next. Yeah, so this is the trade, guys. Very, simple, not too complex, right? So if you have any questions, just drop it in the comment section, and when I see it, I'll try to attend to you. All right. So thank you so much. Have a good day. Bye bye.